Here we are looking at the markets with a decent rally on the cards and a lot of echoing of the history of 60 years ago, something very interesting that Gary flagged quite a few months ago. We're also going to be looking at the trading opportunities, the best funds to add to the portfolio, which Gary has been doing and done a fair bit in the last couple of days. Also, today's climb, we're also looking at that profit target sort of scenario and rotating out of those positions. So, which one's he rotating out of and what's he rotating into? We'll be covering that in today's report. Good morning, Gary. How are you?
Yeah, I'm good, Chris. I was probably having a shocker in the first half of the year, but I'm gonna come home with a wet sail here, actually, in the model portfolio. So it's really kick some goals in the second half. But that's I think two reasons there. Actually, I've got to give a little bit of a I've got to give a little bit of a thank you to you, because I think, having spent the last 4 years studying those sort of relative strength indicators there, you do get a picture as to how markets do come out of lows. So you tend to get your market proxies. We'll sort of, as we know, the big cap sort of proxies will go first, and then I think you'll start to see your momentum setups start to play out of that. And then we're looking for sort of stocks that are showing that relative strength, or the stocks that are showing an impulsive nature early. And then, in my case here, I do look for that sort of basing pattern, the little 0, 1, 2, 3 as well. So just seems to be some pretty good setups here, to be honest, the last few weeks. So it's been a nice period in the market there. So I feel like I should just close up shop now for the year. But really, this, the market can continue on here. It looks pretty robust there, so it's not showing any signs of weakness so far. So can't see any reasons to close up shop here. Really, if anything, we might, this might be the sweet. This, as I sort of mentioned there, from sort of April through to August there, that's our sweet spot. That's when we should be sort of, almost foot to the floor in some regards. You want to see growing confidence, growing setups, more breakthroughs there. But as they sort of start to set up and break and align, and I think, if you listen to those great traders like, Menavini and even, the Jim Ropals, the portfolio managers there, they tend to sort of, if things they're sort of going into are working, they're getting more confident, then they're adding to their positions there. So that's what I've sort of tried to do, sort of start with the proxies and then transition into the setups, and then try and build positions as we get some more positivity. So far so good. So the market it's interesting market here. So very buoyant, but yeah, it is, you're spot on, Chris. That 60-year cycle has come back to sort of haunt us in one regard, but also potentially give us a great opportunity in a second regard as well. So good stuff.
Well, I'm really grateful that you put that chart in there, because over the weekend when we were talking about Trump was saying, look, we're going to come with a deal with the US, and then waking up this morning and reading it, I was thinking back to your report from a month or two ago, talking about the trucks, but we'll get to that in a second. What I just wanted to round out here is that rotation in the portfolio, because this is quite critical with this stage of the market that we're in right now. The positions that you're taking profit on, I guess that fits into the kind of the grind that you're talking about from here we are May through to August. So positioning yourself for it. I'm just going to try highlight on the portfolio, and you'll, I guess, direct me.
It is a tricky one there, because you sort of can, you can argue you probably just hang on to those and they'll keep going higher, which is probably true. But normally those sort of market proxies, they'll come out of the gates and go hard. They go back to the midpoint. I mean, you got to have a strategy as well. They'll go back to the midpoint really quickly, and then sometimes they can come back and make a sort of high low, or other times they can just sort of grind higher. So first half of gains are made fast, and then they can keep going higher, but the gains aren't going to be as fast, So I think you got to go through the gears a little bit. That's my view. That was always my strategy out of the lows. So as we know, Chris, good traders can be right and wrong here, but you still got to follow your plan. So that's all I've done.
Nice. Well, that's what we're seeing here highlighted. You've had those market proxies, which you talked about. What I would call the market deploys money with more speed, less tax. So they go to the large caps, the market proxies, and you've traded that exceptionally well, highlighting some huge returns. And then this is where sort of you've talked about Minavini, waits a couple of weeks, sees where the market leaders are, the relative strength that you're talking about. And then that's where you can identify those momentum trades. And as the proxies are sort of flash selling out and coming into the grind with the market. You're transitioning out of them, taking the profit of these had that fast rally, and then redeploying that capital with the opportunities that hopefully will highlight a few in this report that you've got.
Yeah.
So is that the sort of point of inflection that you are with the portfolio? 5 large cap, and now identifying specifics?
Oh, 100%. Yeah, and I've missed quite a few trades as well, Chris. There's a few trades I've tried to put on through my reports, and I've sort of missed a few. So I think I missed 2 or 3 there last week, just didn't quite get to the price points. They had those little VCPs, or they had the little 0, 1, 2, 3 patterns, and then they sort of jumped up, got away from me a little bit. So a couple of I've sort of missed. A couple of them I've had to buy higher. They're still showing that strength, and then they've got going, and I've had to wait for a little pullback and come in later on. So missed my first time. But that's the thing too with this. Once you start sort of seeing that strength, like I think sort of Fletcher and EBO are the two that were sort of showing relative strength, and I missed both exits on those two. But then we did get another consolidation, and I was able to get another entry there. So, but yeah, it's so you just got to stick to the plan. That's the key there. I think you're looking for them to break your sort of setups there, coming through those consolidations. Sometimes they can pop. You just wait for them to sort of hopefully come back. It's a nice period of the market here. Hopefully, if you it's worth actually. I just highlighted for another trader there, but I know Mark Webster, who's a portfolio manager for OBD. He's got his own YouTube channel now, and he does cover something called the power trend, which is worth sort of looking at, because it does sort of show sometimes when the market really shows strength early out of the lows, and it signals a power trend, it can actually run a lot further and a lot stronger than everyone thinks. A bit like the momentum sort of stuff that we look at here on Fridays. But when you see that really strong move and it shows strength and holds strength, there's a few rules that it kicks on there. But then you look at some of those power trends, some of those trends can really stay hard and firm for a lot longer than everyone thinks. So, so there's some good signs there. You haven't hit the power trend yet, but I think we may have actually achieved 2 out of the 3 ticks for a power trend. And if you look at those power trends there, what that sort of shows is, I think, maybe 3/4 of the time you get a power trend sort of tick there, you'll get a reasonable move for the next few months. So it'll actually tend to run a lot further, a lot longer than everyone thinks. So that's worth a look at Webby's power trend video, because it goes for about an hour and a half there. I think you can probably speed it up and cut out the start and finish there, because he's probably talking about music at the end. But the power trend itself is a really good analysis, and it does sort of show when you it's like that, they talk about holding the basketball underwater and all of a sudden power comes out. That show of strength early in a trend is a good sign. That sort of shows the market's got strength, and then it can power on and keep going here. So I just think the market, and everyone's going to get caught underweight here, Chris. It's just a classic. We saw it out of COVID. Exactly. We've seen it a few times here recently. COVID, I think 2018 as well. Might be seeing it here again. Sort of everyone's just a bit reluctant. Everyone's trying to go on slowly here, but it looks pretty solid.
Well, that's going to be really good to look at, along with the overlay of the 65 movement, and possibly that power trend kick in then. Who knows? Maybe. But let's look at this.
Maybe we just go straight there. I mean, look, at the end of the day, the S&P 500 and NASDAQ, they've shown strength there. So I think they'll keep going, but probably just sort of grind higher. That's the way I look at it. But the 60-year chart, that's the one that's really interesting there, because we saw that it might have been about 11 or 12% sell-off there on the index when President Johnson there introduced sort of tariffs on light vehicles in the USA. So you got to remember, in the 70s or 65 there, probably every second person in America had a pickup truck. So it affected a lot of people when they brought in these light tariff stuff. I think what happened there is it got wound back. I think large parts of it got sort of enacted. Retracted there, and it probably just applied for a smaller parcel there. So it sounds similarly what's happening today. We sort of come in aggressive tariffs, and then we start easing them back. But what's most interesting there is after that 45 sudden sell-off there, market did bounce pretty quickly. If you look back there, within 90 calendar days, it actually went to a new high. So I think it was about 2 or 3 days beforehand, for 90 days. So yeah, so it tells us here the market can recover pretty quickly. There was one little pull, or one maybe mild pullback in there, but everything else is pretty small in there. So there's no reason why our market can't keep grinding it higher here. So
And just the little bit of difference is sort of the shift in time, isn't it? You're looking here at a June low, whereas obviously setting it up in May. And then you're talking about the cycles of being the decade and the US presidential cycle sort of have us towards what is August, September sort of period.
Yeah, the funny thing is the 65 year is actually out of sync with most of the other 5th years and post-election years. So it's actually an anomaly in some regards. But 60-year cycle has probably resulted in us having this sort of bigger crunch there, which we don't normally see in those 5th years. But it does align with all the, we showed a chart there where I think, mid to late March was probably 2/3 or 3/4 of the lows, and then around 25 to 30% carried on to the first week of April sort of lows as well. So it's just a lot of deep lows in those sort of 5th years as well. But I think if you look at the history of the NASDAQ tends to find the lows in the 5th years and the post-election years in early April. So it's kind of, some reason it's been a bit of a laggard. But the NASDAQ is probably having maybe more of a heavier influence over US markets now than it ever has done. Yeah, obviously your Mag 7 stuff there. So, but yeah, early April low is very prominent on the NASDAQ throughout those 2 cycles there. So yeah, that's exactly what's happened here. So yeah, it's just probably a bigger shakeout than most were thinking, but it does happen sometimes.
Okay, so that's conforming with sort of the out of cycle 1965, but the tariffs are just uncanny 60 years later.
Yeah.
The US
same correction in time, exactly the same amount of calendar days. Like it's it's like history doesn't repeat, eh?
It just rhymes. It rhymes all up.
Yeah. So it's been a great proxy too. I mean, if you think about anyone who's probably followed my work for the last 10, 15 years now will know that the 60 years sort of cycle there, it's had a strong bearing probably 8 out of 10 years. So it's not sort of, sometimes it doesn't go exactly to plan there, but I think if you actually look at the key highs and key low months in the 60-year cycle, you'll find that I reckon probably 75 to 80% of the time, those months do sort of mark pivot points as well. So you definitely get the exceptions there. But yeah, it's been a fairly good indicator there for a while now.
Well, I've definitely watched you do that with your portfolios and just use that as your blueprint for the year. It's amazing once you sort of understand it. It gives you great confidence. It's sort of, okay, I'm going to sell my momentum trades into these highs because we know the 50-80 rule that it's very strong probability if the market turns, my momentum trades are going to do more than that drop than what the index does. And then exactly like you've done, you've loaded up out of the low into the market proxies, the high beta kind of stuff. And then you get into, when you sort of get this reset, you're then looking for the market opportunities after the power trend possibly kicks in. You're looking to the relative strength for those that can carry on further. But from a relative performance, they're actually going to outperform the market because this is an index that runs slower. So yes, definitely for working with you for about a decade and reading your reports, I've learned a lot from that, and it does give a lot of confidence. The part that's a little bit different is obviously Australia just dances to a little bit of a different drum. We had our election more recently. We don't have a US presidential cycle, but it does have an impact and bearing onto our market in ways. What's happening in the Aussie? Anything different, or are you seeing sort of a similar grind towards that August, September period?
Yeah, similar grind. They probably showed a bit more strength there, Chris. Obviously, we had that long tail, which is a bit synonymous with the Aussie market. We know that as we tend to, we're often the only one open, and the market can freak out a bit more. So we do have a history of those long tails. If you go look at if you go look at a long-term all ordinaries chart, I mean, it goes back a lot more in history. we will see these long tails show up there. So I mean that's great. Yeah, they're great opportunities as well, which has helped us lead to those gains as well. But yeah, we've actually shown probably even more strength than the US market out of the lows there. So that's a good sign for us because really the commodity sector was probably the one, apart from gold there, I think everything else has sort of lagged there. So, even in the chart this week, I thought, BHP was at such a critical level this week. If there's any concerns about our market, then that's the level it needs to break.
Show up.
Yeah, and it broke yesterday. So it actually closed above the, that 38.30 level. I actually added a position yesterday on that break. I just thought it was a good signal. Such a key level. So, yeah.
Well, for reference, as recording, the market's gapped up. BHP's well above that, right?
Yeah, that's right. Yeah. Yeah. I added to a few names actually yesterday as well. Just seeing all these, 0, 1, 2, 3 bases, seeing VCPs, just seeing sign of strength there. So, seeing increase in volumes for the good stocks as well. So, just seeing all the things I like to see. It's just, you don't normally get, in terms of my playbook, I find that sort of maybe one or two of them are sort of working at one time and others sort of maybe switch off a bit, but like sort of probably, three of my more popular trades are all working at the same time here. So, the answer is, I was like, there's probably twice as many signals as
You normally get.
Yeah. Oh, yeah. And also I can't, you're having a pick and choose. So you're really sort of filtering through. So I don't know if I chose all the best ones in the end, but I'm happy with most of them. So, yeah.
Nice. Well, one of them that's is at the large end of the market, and a lot of people do ask about in their portfolios, particularly the self-managed super fund portfolios, have this in a growth portion, not the dividend portion of their portfolio. It's tracked sideways for many years now. CSL at the lower end of its range, and after the lows that we had in 2023, it's actually come down, and as you've highlighted here, false break. So it looks like it's even edging lower with sort of lower lows and the lower highs. So is this concerning for CSL? How do you read where it is now?
Yeah, it's just, we've sort of had that impulsive move up into the high previously and then gone sideways for many years, which is often the case there. You can get caught in your sort of sideways moves there. So, but yeah, it's just when you did get into those range bound markets there, you tend to find that you'll come back and retest the old highs. You might even get a margin new high, a margin new low. So we've seen in the recent years there, we've seen some pretty big trading ranges with a lot of stocks. So, we did recently just see a marginal new low there. I think it's only gone, I think, I don't know if it's a few cents, but it's only gone marginally lower than the previous low in 2023 and then reversed, and it had a pretty nice bounce there. It's had a bit of a sharp bounce back there last week and a bit of volume there. So it's probably just gives maybe paints a sort of slightly negative there, but we do know that when we do get those lows there, you can see how it can bounce around, show a little bit of volatility around there, because normally your volatility is going to be greatest one or two areas. It's always going to be high, highest at the highs or highest at the lows. It doesn't get volatile in the middle, So, we are starting to see volatility increase there. That's normally a good sign there. It's when it feels the most dangerous to be entering, that's often high tide in some regards as well. But I think, at the end of the day, we've sort of I think we've actually got a pretty good risk reward stage here. Because if I was looking at entering here, I'd be buying with a stop just under the current low. So from a risk point of view, when it bounces here, potentially going back up towards the 300 mark here. So, there's probably $60 to $70 upside here versus what, $5 or $10 downside there. That's a pretty good risk reward there, even though it does take a time here. But yeah, I think it looks pretty solid here.
Well, the next one in your report, not CSL, we go to Cleanaway. So very different company, different industry, but it seems to be tightening that volatility. So you've highlighted here sort of as it's getting a few touches on this wedge and then sort of trending sideways when the market has been really volatile. So What's that relative performance look like, and what's caught your eye to put it in the report?
Yeah, two things come out there was is the volume. So definitely sort of showing the sort of accumulation sort of style there. It is a bit of a corrective trend. So even though that's downward there, it's overlapping. So it's not really a particularly strong downtrend. And then that the really, the clincher there is the tightening price action. So we got a little bit of VCP in there as well. So the fact that we've got a corrective trend, we've got good volume coming in, starting to break out of that trend on a VCP, that's a good sign as well here. So yeah, I thought that looked really good, Chris, as well. So yeah, looks pretty solid. But so there's good signals everywhere at the moment, I think.
Well, another one that you have been watching for some time, Ebos, and it has sort of just kicked out of it. So you were showing the 0, 1, 2, 3, and now 4. Is this one of those patterns that you were talking about that occasionally you might get this one show up or that one, but now you've got 3 patterns showing up, 3 setups?
Yeah, so we got the good basing pattern as well there, which definitely shown relative strength. Versus when you think about the market, how weak it has been, the stock's been making high lows. So we know that when we look back after these lows and look at who the best performers are, it's the stocks that are sort of showing the relative strength where the market's showing weakness there. So it's shown all the right characteristics here as well. Actually did a placement here, Chris, as well, just around that sort of fourth low there, and it held. That was probably the key for me, is actually did the placement and actually held pretty tight, and then actually broke the swing high. So I thought, well, that's a good sign there. Sort of, if it was going to sell off on any, that was going to be. I guess they just told me the market is confident about what they're doing. Price action sort of, pretty positive. So broken a little tight range here as well. High lows, so again, just all the right characteristics you want to see. So yeah, it's been probably hard to add to this one, but that's always a good sign. If it's hard to buy, it's always a positive sign.
Now, one that has been hard to buy in the past and looking to break the B-wave breakouts, NEU, Neuron Pharmaceuticals, did actually get a bit of negative news with sort of what's coming out of the US and how they're targeting some pharmaceuticals. But you're showing this overshoot, and you've got a few other markers on the chart. So what's the critical part of this chart standing out for you?
Yeah, there's two things. So I'm going to give a couple of secrets away, Chris. Oftentimes when I see like a descending wedge or a big sort of triangle or sort of pattern there on the decline, when you see the breakout to the downside out of that pattern, see how we broke out, around there. So it's sort of the same thing. It was a couple. I know Luca did the same thing recently. I think might have even been PLS as well. Broke as well. So they had these sort of, they're trending down, but they stay in these sort of tight channels. They tend to sort of just overshoot, and then they come back in the channel there. That's often actually, you often sort of see them reverse there and come out there. So it's often been something I've noticed over the years quite a bit. So I haven't actually built any rules around that, but it's one of those ones. Do you wait for it to break out the top side before you enter, or do you just once it breaks below and comes back into the trend, maybe closes, the daily or weekly in the trend, you follow it there? I don't know. I haven't tested this enough there, but I've just noticed over the years that when they overshoot like that, they tend to come back and bounce the other way. So, so I think this looks pretty positive there. I know that NEU's got quite a few new products on the agenda at the moment, and quite a few analysts I know are sort of talking about, what they've got in place at the moment. Commercially, probably they just share around $11, $12 there, but they got all these potential catalysts which could extract a bit of value here in the next 12 months. And so it's definitely one to keep an eye on there, because it could have some positive catalysts for the rest of the year. So I just thought I'd just highlight this one there to see if it comes back and maybe retest the break zone. Definitely one to keep an eye on there.
Okay, so we go from hyper growth potential with a pharmaceutical to what we tend to call more pedestrian and slower. However, they have been quite different in the last year or so, being the office REITs. So I'm seeing similar markers here: 0, 1, 2, 3.
Yeah.
This is a really long, drawn out. Pretty much all of 2024 was just a basing pattern.
Yeah.
That happened before. So
I think Stan Weinstein says the bigger the base, the bigger the move follows. So this is like a 2-year base. Or maybe maybe 18 months there. So 18-month base there. So that can be followed by an 18-month breakout as well. So, yeah. And I think the good thing there is look at those last sort of 5 or 6 weeks of volume as well. So really impulsive, sort of strong volume. So if you think about the macro picture as well, obviously, office rates and stuff there haven't done so well because obviously more and more people are working at home, but starting to see shift in that a little bit, starting to see commercials, bringing staff back. We've seen a drop off in productivity with everyone working at home. So we're now getting called back to the office. And then, if cost of inflation sort of, pressures there, and then, if the jobs start to sort of tighten up a little bit, then employers will probably get a little bit more sway as to how many more days you got to be back in the office as well. So I just think you'll seeing the tide starting to turn here for that, these sort of property trusts, and there's a fair amount of yield there as well. They're pretty, fairly undervalued there. I think occupancy is about actually probably stronger than everyone's anticipated. And when the market's pretty high like it is, I mean, Combank's back to a yield of around 3%. Not that exciting there, but most of the property trusts are probably averaging 6 to sort of 7%, fully franked as well. So probably just some valuation measures there was interesting there. And the one thing we know about property, Chris, if inflation remains high, property prices won't be going. If it costs you more to build a house, an apartment, or a commercial block, then the value will not come down. So that's something our history has taught us over the years.
I was listening to an interview this morning with the Insurance Industry of Australia talking about how they've had to factor that in. And normally they factor in building costs to go up 2-3% a year. And the last 3-4 years, it's gone up 40%. So that's really hit the profits of the likes of IAG, QBE, and so on. So how that flows through to these assets, well, they've obviously got the existing building. They don't have to build it. And the replacement cost is up 40%. So it should show up the share price somewhere.
No, you just need to look. If you go back and look at the 1970s there, where we averaged around 7% inflation for about 8 years, the cost of the valuations on property sort of were up. Well, the average 9.5% over those 8 years. I guess it was kind of hard. It's hard to fathom that when I read that initially. So I thought, it's inflation's, would be a dampener. But I guess the common sense is that if it costs you 7% more to make that house each year, then the valuation can't come down. It's got to go up. So that's exactly whether we like it or not. That's the reality.
Definitely. And another one in your report, Web. So the travel group, and they've had the recent sort of corporate actions splitting and so forth. But 0, 1, 2, 3 once more, you're looking at this wedge pattern, so a tightening of volatility and getting to the pointy end. What's also worth noting is, yes, it does sort of echo in with the market drop in April, but then when we had the washout into May, it was creating the higher low. So how important is that for Web and your criteria of one that you may put in the portfolio?
Yeah, two things I love there is one, the false break. So we've come back, retested the old low and only gone a few cents lower. And then we started to build a base there. It sort of tightened up. Volume profile, not awesome, but solid. Slightly more firmer on the up days and then slightly, eases back on the declines there. But we did actually get a little bit of a show of strength there yesterday and some pretty good volume. So I did actually add to that positive yesterday as well. And it has broken out of that range and also broken above the 50 now as well. So just seeing, I've seen so many of these, like normally those sort of 0, 1, 2, 3 patterns normally take a bit longer to set up, Chris. Normally they can take quite a few weeks or even months to sort of set up. So it's probably, I've seen so many of them set up here, maybe over the last 2.5, 3 weeks there. So some really, just really good setups there. So it's one of my sort of, favorite sort of setups there. Yeah, I love the false break. I love the 0, 1, 2, 3. I love the VCPs. The episodic pivots are a little harder to trade. Even the bull flags are a little bit harder to trade as well. But those 3 are really good. It could do a bit of work there, because that's the thing about those. If you get 3 sort of higher lows, it's giving it time there. In the past, there was sort of my impatience to buy things that I thought were undervalued, often will take a few months to set up. So now I try and wait for those sort of 3 high lows to establish themselves, and coming in a bit later, I just find that's helping with a Mina Bini phrase about being in the market the least amount of time for the most amount of gains. So you're not sitting in there for months waiting for the whole thing to build a base first. It's already, you're watching the base getting built, and then once it's built, you're coming in hopefully to get the cream of the move there. That's the rationale around that sort of setup.
You might be able to recall the quote. I'm going to butcher it. There's something about you let the other participants lay the foundations for your gains, and that's sort of
100%.
So, well, that's definitely what we've done with the 0, 1, 2, 3s. And I know that you've timed it many times before where you've actually picked a low and traded it, but then sort of resented the position for having to hold it for so long to actually get the fruition of your trade and getting it right. So that's really interesting. But I do love the 65 chart. That's just phenomenal and amazing. And I know that you were talking about it months ago and we learned from it. And I was skeptical as to whether we would sort of see that sort of repetition again, because I know the 60-year cycle has worked for you so much in the past of identifying the highs and lows. And to that point, we say thank you very much, Gary Glover from Novus Capital, for another great week's report.
Thanks, Chris.
We're going to put on the right there the model books. That's where Gary puts a lot of his work, time, and effort into studying the best market leaders, and then he's put that into videos for you to go back and have a look, because he's used that as a blueprint for a lot of the trades that he's talked about today. We'll close with that.